what to do.
Right. Okay. So we talked about all these estate tax things. There are other transfer taxes that we need to be concerned about. So is there still a federal gift tax?
Yes, there is still a gift tax. The gift tax works pretty much, I think people are familiar with the annual exclusions, which is currently $13,000 per donee, per donor. And then you have a $1 million lifetime exemption on top of that per donor. So you can still give away up to $1 million or $1,013,000 in a given year to a person, and you won't have to pay any gift tax. But if you go over that, then you have to start paying a gift tax, which is at 35% rate. It's still there. It's there so people won't gift assets back and forth that are producing income.
So for income shifting.
Yes, I could if I owned an apartment house that produced a lot of rent, and I wanted to put my kids through college, I would give the apartment house to my child, let them have the income for 4 years, and then they would give it back to me. And that would shift the income, and that's what Congress doesn't want to have happen. So the gift tax is still there for that purpose.
Yeah, okay. All right. Now, isn't estate tax repeal a problem because of many estate plans have formulas in them that are sort of built on the
Correct.
tax?
We frequently, in crafting estate plans, the way we've been, well, gosh, I've been doing this since the mid-'70s, and the formulas haven't changed too dramatically over that period of time. But now we've got a problem because we would normally say, I leave to what we would call a bypass trust the exempt amount, and that exempt amount is the maximum amount I can leave to someone other than my spouse, upon which I'd pay no tax. Well, that exempt amount is now infinite.
Yes.
So you're going to have money going into what we used to call a bypass trust for the benefit of maybe not the spouse. You're not exactly sure, but we would do those differently. And so the formulas are going to drive dollars where you may not have thought you want them to go, and then we leave everything else as a marital gift to a spouse. And so depending on the types of formulas people used, you may have a problem with those formulas working properly. The one I just mentioned before, which was the generation skipping one off the top, is probably the biggest one.
It's a real radical one.
But here's our thinking. When we started to look at all this late last year, when it looked like this was going to happen, we kind of originally panicked. But then we realized there's all sorts of what we call rules of construction over trust instruments and things. And you have to look at what the testator intended. And those intentions are drawn from the time in which the instruments are crafted. And at the time, there's a tax scheme where this formula makes sense. If you went to court after someone died, you could say, Judge, this is what this really means, even though there is no estate tax. This guy didn't really mean to leave everything this way, but he wanted to be shared in a rational way based on the tax laws as they then existed. And that should win the day in every circumstance. But if someone thinks they're going to be passing on, or their health isn't good, then maybe going in and making changes. And you can make the changes, and we're doing that right now, that only exist for a year.
Yes.
And then everything reverts back to the old system come next year. But even the old system may be up for grabs. We can't be 100% sure what's going to happen.
Right.
So other than some sort of extreme circumstances, we're telling most of our clients just, play it, just pay attention. There's probably, don't panic, don't do anything right away unless there's somebody is going to die.
Yeah.
Then it's probably worth our time to fix it because we think we can fix it post-mortem anyway. But it's just one of those crazy things where, a tax practice that everyone's done. I have talked in groups of over 1,000 lawyers, and I've asked people, did anybody in the last 10 years draft any document in anticipation of this? And the answer was no.
Nobody believed it would happen.
No one did it.
Yeah, Jim was involved in a presentation not too long ago. I'm trying to remember what the title was, but it had something to do when pigs fly.
It's when pigs fly, the Cubs win the World Series, and hell freezes over.
Yeah, and it's all happened. So
it happened right now. Bet on those Cubs to win the World Series this year.
There is another thing related to this that really has a broad impact, and that has to do with the marital deduction. And again, that ties into these formulas that we're talking about.
Yeah, correct. The marital deduction, was pretty simple, and that is you could leave basically anything you wanted to your surviving spouse, and it was exempt from federal estate tax. And we would build formulas on that concept. The problem is all of the language that deals with marital deduction was repealed.
Yes.
It doesn't exist anymore. And so when you're building formulas based on code sections and thought process on the code that doesn't exist, you have the same problem with the marital deduction. You can build those formulas using the marital deduction up front or in the back, or the credit amount up front or in the back. So people did it different ways for different kinds of purposes. So you have the same problem when you're referring to a deduction that doesn't, in fact, exist anymore.
Okay. So now we've talked about all these problems. I think you talked a little bit around this before, but maybe again, let's sort of summarize. What can be done, or what should be done, do you think?
Well, I think most estate planning lawyers, I know we've tried to outreach to all of our clients to let them know what our thoughts are. We've had a number of people contact us. And some people have decided they want to make some changes. And if you're going to do any kind of just regular change, maybe there's a new child or you want to make some other provision, you need to do a couple things. You need to deal with this basis allocation rules. I didn't explain what those are. I'll explain them here in a moment. So when adding language in wills and trusts dealing with basis allocation, if we've also been adding language to deal with this transitional year, so that the formulas work because we apply the law in 2009 for the purposes of the funding, and that will get the property where people want it to go in a rational way. Let me talk about the allocation rules, because there's a couple of special rules.
Okay.
And that is that under the law for this year, any decedents, you can allocate $1.3 million of basis to any asset you want, but it has to be allocated on an asset-by-asset basis. And there's a special allocation rule for spouses, where a spouse can get $3 million of increased basis, once again allocated. Now that gets interesting. Where do you allocate it?
Yes.
Do you allocate it to real estate? Do you allocate it to low basis stock? They may be going different places. And so somebody might get an asset allocated to them with no basis.
Right.
Somebody else might get an asset allocated to them with a partial step up in basis, because you can move it around.
Yeah, so we can get some upset family members
Yeah.
because of this. I got the basis and you didn't, or something like that.
So what the language we put in is to give the executor, personal representative, the complete discretion to allocate it, so that there's somebody who's going to make that decision. Now, a lot of the times it's going to be pretty easy to figure out how to do it, and so there is some ability to get the basis stepped up. But in our area, if somebody's owned real estate for a long period of time, the historic basis can be very, very low, and even with a $1.3 million special allocation rule, it's not going to help.
Yeah, if you have very much real estate that you've had for a long time in our area, like you said. So my parents probably bought their place for about $30,000. It's worth about $1 million or so. And again, if somebody bought several properties over the years, then there's that potential.
Yeah, well, fortunately she passed away just at the end of the year, but a lovely lady that most people had no clue that she'd amassed about $30 million worth of real estate. And obviously, and she's left everything to charity, so it's not pretty much a big problem. But that hadn't happened. I mean, they're going to get the basis is going to be there. So.
Okay. And avoid formulas for now, except for that maybe if you look back.
Yeah.
And
what we're doing now is, what do you want to do with your property? And we're not using our traditional formulas, but if a married couple comes in and says, well, I want everything for the benefit of the surviving spouse, and I want to make sure it goes to the kids after the survivor dies, we can draft that trust that achieves those goals that will work whether in or out of an estate tax scenario.
Yeah. Well, you can always make specific bequests and things. I mean, what have you.
We can do it.
Now, if somebody passes away, again, now we're going to court to try to get this.